All right, let's dive right into a real head-scratcher in the EV world. We're talking about NIO. Here's a company that seems to be doing everything right. Sales are through the roof, they've got a massive list of orders, but if you look at their stock price, it's telling a completely different story. So, what is going on here? Let's try and unpack this thing, this great disconnect.
So, yeah, you look at the stock chart and it's not exactly encouraging for anyone holding it, right? It's been trending down. But then you listen to people who follow the company closely, and there's all this optimism. It feels like two totally different worlds. So, why? Why are so many people still bullish on NIO's future? That's the big question we're going to tackle today.
This slide, I think, just lays it out perfectly. On the left, you've got the market sentiment, kind of depressing, feeling totally misaligned with what's actually happening. But on the right, you have the company's reality. We're talking operational excellence, strong fundamentals. They're absolutely crushing it on the ground. This is the disconnect we keep talking about, laid bare. Okay, so let's get into the good stuff. Let's really dig into the optimistic side of this story, because the whole argument hinges on this idea that NIO is right on the verge of a massive sales explosion. Now, is that just wishful thinking, or is there real evidence to back it up? Let's take a look.
I mean, that's a pretty bold claim, right? It's pretty much guaranteed. But this isn't just some random hype. This confidence comes from something very real. NIO's own order books. The argument is that this sales boom isn't really a question of if it's going to happen, but when. So what's the big piece of evidence?
Here it is. This is the key. 15 to 16 weeks. Right now, if you want a new NIO ES8, that's how long you're going to have to wait. And let me tell you, in the car business, a long wait time is a fantastic problem to have. It's a huge sign that demand is just completely outstripping supply. They have a massive backlog of orders just waiting to be filled. So what does a 15-week wait really mean in practical terms? It means if you order a car today, you're not getting it next month. You're not even getting it the month after that. Why? Because NIO's entire production for the first quarter, all of January, February, and March, is already completely sold out. They have months and months of guaranteed max capacity work already locked in. And this is where it gets really interesting. In December, NIO delivered an incredible 22,000 ES8s. But get this, they did that while they were still in the process of ramping up production. That suggests their true full production capacity is probably even higher than that. We could be looking at a future where NIO is just casually delivering well over 22,000 cars every single month. Okay, so we've established that the sales numbers are looking fantastic. But huge sales are one thing. What does that actually mean for the company's bottom line, for profits? Let's connect the dots here, from all those deliveries to actual dollars, and see how this could all lead to a very profitable quarter. Let's just game this out for Q1. And you know what? We'll even be conservative about it. Let's say 20,000 plus deliveries in January, another 20,000 plus in March when they're running at full tilt. Now, February will probably see a dip, maybe down to around 10,000 because of the Chinese New Year shutdown. But even with that factored in, you're still looking at a baseline of over 50,000 high-end ES8s sold in just one quarter. And remember, that's a pretty cautious estimate. So why does that 50,000 number matter so much? Well, because of this number right here. The CEO himself has confirmed that the ES8 has a profit margin of over 20%. That is a huge margin in the auto industry. So you take that healthy profit margin and multiply it by tens of thousands of cars, well, you don't have to be a math genius to see that's the recipe for an absolutely blockbuster quarter. So the flagship ES8 looks like it's on fire, in a good way. But to really understand the whole picture, you have to look at the entire company. And that includes its sub-brand, Envo, which is aimed at the more mass market, lower price point. And this is where we start to see some of the challenges, some of the things that might be weighing on that investor sentiment we talked about.
Yeah, it seems like the community is getting a little bit of what you might call limited edition fatigue with the Envo brand. The recent Year of the Horse edition, for example, kind of fall flat. People were disappointed when they found out the main difference was a little horse logo on the tire caps. It's led to a lot of feedback that the community wants more than just cosmetic tweaks. They want unique features, and it's a real challenge Envo is going to have to figure out.
So there you have it. On one hand, you've got this incredible sales momentum with the flagship ES8. On the other, you've got some clear growing pains with the Envo sub-brand. So how do we square this? How do we finally make sense of this great disconnect between a struggling stock price and a booming business? I think it all comes down to this one simple but powerful idea. The share price isn't the company. It's so easy to forget that. In the short term, the market can get emotional. It can be driven by headlines, by fear, by things that have absolutely nothing to do with how well a business is actually performing. It's a critical lesson, especially in a volatile space like electric vehicles. There's a famous saying that in the short term, the stock market is a voting machine. It's a popularity contest. And right now, for whatever reason, NIO isn't winning that contest. The price is being pushed around by sentiment, not by the solid fundamentals. But as we've seen, those fundamentals are incredibly strong. And that, right there, is where savvy people often see an opportunity. So that's the story of NIO's Great Disconnect. You have a company that is absolutely firing on all cylinders. We're talking record deliveries, a clear path to big profits, and yet the stock price just isn't reflecting that reality. Yet. The real question is, how long can that disconnect possibly last? At what point do record-breaking numbers and consistent profits become the wake-up call the market can't ignore? In the long run, fundamentals almost always win out. And for NIO, the fundamentals are looking stronger than ever. It's definitely one to watch.